afternoon, traders. This is Tony D from easyMarkets. What a dramatic day we've had overnight. You've seen a sharp turnaround in sentiment from being extremely negative at the beginning of the European session when there was the new announcement from China that very fast fashion, within 11 hours, they retaliated against the US, putting up a whole host of US imports for tariffs, namely though cars and planes from Boeing and soybeans, the biggest exports. And this is really amplified it and taken it to the next level. Now these are contingent on the US putting their tariffs in place, so they won't happen if the US doesn't put their tariffs on. And while the market immediately sold off in fear, when this news came out, so you can see the selling in the dollar yen, the market caught the bottom and actually rallied sharply for the rest of the day as commentators and traders turned the tune towards this. And a few of the administration in both China and the US said, look, talks ongoing, this is a negotiation, and so the negativity is only really going to be in place if these tariffs are enacted. If it just leads to negotiation and better trade outcomes for both countries, then you might see the stock markets actually turn to enjoy this. Now, stock markets had an immediate negative reaction when the news came out, but then you can see the size of that reversal candle. That's the daily. This is 800-point high, bottom to high rally, and it's still continuing here in the Asian session. So this is huge moves, but very aggressive and very bullish moves in the short term. So the short squeeze is on, the negative news is all out, and the market's still buying, and hope is beating out fear. And that's the way to play it here. So things which are going to be under pressure, things like gold, euro, pound, they're going to struggle as the US dollar sort of gains from being oversold, and dollar yen leads the market higher. And the dollar index, let's bring up the dollar index so we can just see where we're at. Still underneath that 90 level, but if we break that 90, then the room is for a bigger rally is definitely on the cards there. And given that so much negative news has come out and the market's still able to rally, hold the US dollar gains, it's likely that this attempted test will happen at the very least. Now NFP is on Friday. That's the next big thing in the market, and that's where US dollar is going to get its move from, especially dollar yen. And so strong NFP leads to more chances of three rate hikes, further rate hikes this year rather than two. So the debate's still on about how many rate hikes this year. Is it going to be 3 or 4 in total? And they've already done one. So and the timing of the next rate hike as well is in play, mainly around the strength of the data from the US. And so the NFP is the biggest piece of data released each month, that along with CPI. And the NFP is going to be good again probably, because the ADP number, the private payrolls number, came out last night and was very strong, 240,000 versus 200,000 forecast, leading many traders to expect the NFP to be higher than expected already. So the whisper numbers are starting to come out. Going to get another plus 200, 250 maybe for the NFP, and so that would really help support this beginnings of a US dollar rally and start pushing us past some of those key levels, which for the dollar yen is closer to 108, dollar index is 90, and the euro at 122, previous lows. Yeah, so look, we'll see how it plays out, but at the moment, yeah, you got to be careful. The other pair which is in play and is a little bit harder to sort of predict at the moment is the Aussie dollar was belted down on trade fears, and if trade fears subside, then the Aussie dollar has room to move, not just against the US dollar higher, but against some of those crosses where it took a pounding. So if we're looking at the pound Aussie and the euro Aussie, let's have a look at the euro Aussie first. Sharply lower from those previous highs, and it's got a lot of room to move back towards that 158 level, which would be a bit more of an attractive level if you're looking for long-term ways to play Aussie short. And the pound Aussie has a fair bit of room as well. Pound Aussie moves quicker than even the euro Aussie, and it's on the potential pullback here now towards 180. So keep an eye on these levels as they come into play. If the Aussie dollar does rally, that would put the Aussie dollar up towards that 78, 77.50 level. And at these levels, then you can look at another way of expressing Aussie dollar weakness going forward. So it's in a bit of a downtrend. So selling the rallies is the way to play it. But looking to buy pound Aussie on the big dip and euro Aussie on big dips is perhaps a better way longer term. That way you don't have to worry about the US dollar. You just have to worry about the Aussie being weak. Alright guys, if you have any questions about what's going on in the market, do come through and have a chat with us on the dealing room numbers below. If you're not a member, there's also links to sign up and get a dealer like myself to assist you.